Let's take a look at what's happening economically and do a little recap before we start this week. What America's supply chain backlog looks like up close. California's Port of Los Angeles is struggling to keep up with the crush of cargo containers arriving at its terminals, creating one of the biggest choke points in the global supply chain crisis. The ships can't get in, and if they do get in, they can't get unloaded. And if they get unloaded, we don't have truck drivers to get the containers to where they need to be, meaning the goods that we need aren't where we need them to be, and consumer demand can't get met, so prices are going up. This is adding to the inflation problems that we're all seeing, and this is not just a USA problem. This is a global supply chain problem, leading to more and more inflation. After Powell said last August that inflation was, quote unquote, not going to be a problem, then he updated that to say that, don't worry, inflation is only transitory. Meanwhile, I was saying inflation is a problem and it's not transitory. Now Powell says supply-side constraints have worsened, creating more inflation risks. The Fed chairman indicated he is now somewhat concerned about higher inflation. Somewhat concerned? We're all concerned. Everyone's concerned. You're concerned, I'm concerned, and we've all been concerned for a long time. It's nice that he's catching up to us, and said that the central bank would watch carefully for signs that households and businesses were expecting sustained price pressures to continue. I'm glad he's watching carefully. That really helps us all when we go to the supermarket and our wallets get drained because prices are just going out of control. So we appreciate that. Fed's Powell, on track for taper. High inflation could last into next year. I want you to understand what taper means. Taper does not mean stop. Taper does not mean reduce. Taper means slow down. So, more money is going to continue to go into the economy at a slower rate. Now imagine a balloon ready to pop because you overinflated it. And now you don't let any of the air out. You just slow down the amount of air that you're putting in, increasing the size more and more. Does that make the economy safer? Is that going to reduce inflation? I don't think so. In fact, I can really tell you that it will not. We did this in the 70s. We've tried this before. When you've gone too far, you've gone too far. And that's what's putting everything at risk right now. Too much money in the economy, too much inflation, and that has caused too many bubbles, putting our assets at risk. Bottom line here is that the Fed continues to talk while we all know what's going on. Inflation is a problem, and the Fed has done nothing about it, and there's no real plan in front of us. And this has created a global problem, not just here in the USA, where we're also facing supply chain issues, labor issues, and debt that is increasing dramatically to a point that if the debt explodes, we all explode. And if we raise inflation, debt's going to be a major, major problem. So what's going to happen next? Nobody knows. I can't tell you. Powell can't tell you. Financial advisors can't tell you. Institutions can't tell you. No one can tell you because we've never been exactly where we are today. That's why it's so important for you to take some responsibility and keep up and know what's happening. Make sure to subscribe because we're going to keep you in the know.